Hi everyone, I'm Luke Mclaren with the Mclaren Real Estate Team, the real estate company, and we'd love to welcome you to our first episode in our new series called Real Insights. And in this series, what we're looking to do is provide some valuable information for you and some great tips on all things real estate. And so for our first episode, we're very honored to have with us Stewart Douglas, mortgage specialist with Scotiabank, great guy to boot. And we're going to cover some very specific mortgage questions that a lot of people have. So we're going to do this in two parts. Part one, we're going to cover some of the basics. And then in part two, we're going to get more in depth and talk more about people who are already own a home and selling a home and looking at purchasing a new home. So anyways, Stu, great to have you with us.
Thanks, Luke. Pleasure to be here. Very honored to be here for your first video.
Oh, hey man, the honor's all ours. So to get started, why don't we just get right into pre-approval. So a lot of times when we're dealing with people and lots of our great clients, they're wondering, do I need a pre-approval? Is there specifics about pre-approval? So why should people get pre-approved before they start home shopping?
Great question, which I'm always used to from you, Luke. I think pre-approval process is very important for someone to go and sit down and go through. We can look at every scenarios, and I run into this, periodically, more often than I think I should, where people are coming to me. They thought got the impression they were pre-approved. They made a purchase on a house and then gone through the process and find out they're not. So why is it important to get a pre-approval? Pre-approval really gives you a little more comfortability in terms of going out shopping from a home, making sure you understand the process, what sort of rates that you're looking at. We can do rate holds on those. And we're really looking for any red flags to make sure that if you're going to move forward with the purchase, that we feel pretty confident that you will in fact be approved at the time you make the purchase.
Okay, so if I go through the process, I get pre-approved, does that guarantee that when you find the right house, make an offer on the right house, are we going to get approved for that mortgage? Is that guaranteed?
It does not. No. So every single application is property specific, and they're also specific at the time that the application is done. So if someone comes to me and they get a pre-approval done, I'm the only one that looks at the documents in those. I don't, and versus if you write a live offer, I'm going to send those into my underwriting center and it's going to go through the full process. There can also be scenarios, depending on what your down payment is, if you have to have your mortgage insured or what that looks like, where you might have another party that's also going to be involved on a full approval versus a pre-approval. And those people won't look at documents. They won't even look at an application unless you have an offer to purchase. So really, that's a great question. People that go out and don't have a pre-approval at all are running the risk of wasting their time. Really, that's the biggest risk, putting down an offer and finding out they're not approved. Sometimes I have people come to me, they just want a rough idea, they don't want to do an application at all. I can run those numbers. I put no confidence in those because I'm not confident in a pre-approval even until I see the proper documents.
Okay.
So
that makes
really
sense.
It gives peace of mind and it avoids you going out and wasting your time as the person that's going to purchase the home. And for yourself as a realtor, you don't want to be out there shopping for somebody unless you're pretty comfortable they're going to get a home.
Yeah.
And I don't want to be working on something unless I know that I've given someone proper direction.
And having said that, if you're in a position where you're just interested in looking at a property, you're not sure if you want to buy, we're willing to work with you on that basis. Let us know up front and we'll go from there. But typically speaking, until you're pre-approved, everybody's just potentially wasting their time, especially with all the changes that have been going on. A lot of people, even if they were approved maybe a year ago, doesn't necessarily mean that you're going to get that same pre-approval today.
Exactly what you just said. The number of changes that have come into play in the last 3 years, let's just say there's been a lot. Many more than I'm used to. And on top of that, with the changes in pricing, in rates and so forth, they're continually fluctuating. those will affect certain pre-approvals as well. So 100%.
Okay. So specifically, just to summarize this point, because this is a big point, when you get a pre-approval from yourself, or probably most lenders, for that matter, you're getting a pre-approval based on what they see. But once you write an offer and you have a live offer, then the underwriting department of whatever lending institution you're working with actually goes through and will specifically give an approval. So it's really a two-stage. An initial stage where you're saying, hey, this is what it looks like to me based on all the information you've provided. But until the underwriting looks at it, they look at the particular house that you're making the offer on, and they go through in detail the things that we've provided. That's when you'll know for sure.
More or less, that's correct. Even in pre-approval scenario, it does get looked at by my underwriter, just none of the documentation. So what they're going to look at is double check on your credit bureau, check all the information I've inputted, and see if there's any red flags. What they're not getting, they're not going through, do you have enough down payment? Where is the down payment coming from? What is your income? What type of income you have? Is there any other items that we can be pulling funds from? So those, you're right, when you say that, they're not looking at any of those documents. And it's always better to have a second set of eyes on everything, because we're all human, and mistakes can be made.
Yeah. Okay. So having said that, for the pre-approval process, typically what kind of documentation are you looking for?
I think everybody will do that differently. I ask for the minimum documents I would need to do a proper pre-approval, which means I may not ask for a second piece of income documentation, or I may not ask for you to show me upfront immediately that you paid your income taxes, or whatever it is for your particular scenario that we need to look at. So yes, I keep it to a minimum, but I get enough documents in order to make sure that when we move forward, there's not going to be any hiccups. And everybody's going to work differently on that. Some of the scenarios that I would advise people to really look out for, most common when people are coming to see me after they thought they were pre-approved and then went in with a live offer to find out that pre-approval isn't valid. If they aren't asking you for some income documents, if they're not pulling your credit bureau, if they're not getting ID from you at a very minimum, then most of it is probably speculation.
Yeah, which we don't like to deal with.
Which is a tough one to deal with.
Yeah, yeah, okay. Okay, so the next question, I guess, becomes a little bit obvious, but I think it's very important. So just because I have a pre-approval and say, oh, no problem, I've been pre-approved for that mortgage, doesn't guarantee I'm going to get it, which means I should still be putting my offer subject to financing.
That's correct, yeah. And typically we ask for 10 days. That's the standard in our industry. Sometimes we get them for 3 or 4 or 5 days. But if you can get up to 10 days, that gives a lot of comfortability in case things go wrong. Obviously, we don't want to take 10 days to underwrite an application, but it depends on what steps are involved. You might have an appraisal. There could be some questions coming from another party that's looking at it. We might need more documentation. You never know what sort of challenges could potentially come up. Now, all this being said, for the majority of straightforward applications that we do, which would be the majority of applications that I do anyways, those particular cases, they're going to be done quicker.
So one of the things that a lot of us have been hearing about a lot, and it's been in the news a lot, is mortgage stress test. So I'm sure a lot of you folks have questions about that as well. So what's the deal with mortgage stress tests? Is it something that affects everybody? Like does it affect all of our clients, and how does that actually work? What does that mean, mortgage stress test?
Well, the mortgage stress test I actually think is a fantastic idea. The whole premise behind the stress test is to make sure that when someone's negotiating a term for their mortgage, whether it's 2 years, 5 years for the term that they're going to have on their interest rate, when that comes up for maturity, if rates have jumped, are you still going to be able to carry on the debt load that you have comfortably? Is it affordable for you still? And they just want to make sure. So when we're doing a mortgage now, we don't use the actual interest rate that the person is going to be using to qualify them on their payments. That rate now has to be increased by roughly 2%, depending on if you're insured or meaning you have 20% or more. It just depends on your down payment, but it's roughly about 2%. We have to qualify that you're going to be able to make those mortgage payments still comfortably. And
Okay.
It's not going to be an issue when your mortgage comes up for renewal.
Okay, so let's say, just give me today's rate for a 5-year term on a mortgage, just roughly.
Say you're at about 3 1/4.
3 1/4. So what the stress test does, if I have to, so even if I'm going to get 3 1/4 as an interest rate, I actually have to qualify at 5 1/4. That's what you're saying?
That's correct.
Okay.
And it just depends. Again, if you have 20% or more, they're going to add 2% onto whatever rate you're getting. That's the mortgage rate you're going to qualify at.
And that's the stress. If mortgage rates go up, can I still make my
2%,
payments?
Can I make my payments?
Got it.
Correct. In other scenarios where if you have less than 20%, which is another topic we will talk about eventually, you're going to be insured your mortgage. In those scenarios, they're going to use what's called a Bank of Canada benchmark rate. So that's a higher rate. It's 5.34. Now, those rates are going to go back and forth as to which is harder to qualify. But basically, roughly speaking, at this point, we're seeing at 2%.
Okay. So in conjunction with that, let's say, we've gone through the process, we've got a pre-approval, you're giving us a rate, and is that rate going to be good for a certain period of time? How is that going to affect our
Key
clients?
part, that's a great question. That's a key part of a mortgage pre-approval process. It depends on the rates, if there's a special, the term, every institution's different, every time frame is different, but yes, typically when you do a pre-approval, you're holding a rate somewhere between 30 to 120 days, just depending on what the offer is. The standard ones are about 120 days that will hold the rate. So if you take possession of a property within that 120 days, you've kind of got a guarantee on a rate that you're going to get. Obviously, if rates are lower than that, you can always go lower, but it kind of gives you your high end on a rate if you purchase in a certain time frame.
Okay, so that time frame doesn't mean I make an offer within 120 days. I actually have to take possession within that 120 days.
Correct.
Got it. So I come to you, Stu, I say, okay, looking for a mortgage. Today everybody's saying rates. Like, what is my rate? What is my rate? Like, that's the big thing for most of us, right? What kind of rate are we going to get? But there's a lot of other things involved in getting a mortgage other than just rate. So maybe you can enlighten our viewers a little bit on some of these things that often get overlooked until after the fact and they start reading the fine print.
Yeah, absolutely. And you're right. Rate is a driving question, number one question by most people, not by all. And there are many other components about a mortgage, and that has changed significantly since I started this industry 10 years ago. So there's different types of things out there different types of rates that will have different types of restrictions on them. So it's key to know what restrictions you have on your mortgage before you get involved, what the benefits are. For example, which we'll probably talk about down the road, people are going to be looking at, can I prepay my mortgage down at all? What are my prepayment options? That's key. That allows you to pay down your mortgage without experiencing any penalty to some degree. Is my mortgage portable? That's something you really want to get into and understand what porting your mortgage is. But porting a mortgage, for me, that's a big thing. You should have the ability to port your mortgage. Not being able to port your mortgage can potentially cost you thousands of dollars down the road.
Yeah, I mean, like you say, we'll get into that here in a bit.
Yeah, so yes, there's those parts of it. Also, there's things when back in the day when our folks were growing up and they got a mortgage, they got what was called a standalone mortgage. Nowadays, the majority of people are dealing in collateral mortgages, which I love, and it just provides you flexibility. What a collateral mortgage does, it allows you to borrow, gives you opportunity to borrow down the road, given certain conditions and if the situation's right, without having to go and refinance your house. So if you create a bunch of equity in your house, you want to go buy a new house, you want to buy a car, you might have equity in your house for down payment or purchasing a vehicle or investments or whatever that is built right into your home. So someone like me, for example, it looks like I've never paid a cent on my mortgage because I'm continually borrowing it off it for other opportunities that come up.
Right on.
So there's a lot of things that go into play in terms of mortgage, and making sure that you really understand, so that you're getting what's going to work right for you, and you're not going to be put out of money, having money come into your pocket unnecessarily.
Yeah. So super important point. Super important point. Make sure you look at all the options and all the types of mortgages. And like you say, these days a collateral mortgage is something that's very popular and allows for probably maximum flexibility and future options. So
I deal with very few people that don't have a collateral mortgage nowadays.
okay, right on. Why is it important there's a good, strong relationship between your realtor and your mortgage broker? Because, you know, working together, there's a lot of times people think, well, I have my mortgage broker over here, I have my lawyer over here, I have my realtor over here. So why is the relationship between the realtor and the mortgage broker important from your viewpoint?
I know that you and I would be able to attest that that's very important, just from our own experience. But the reality is, for both sides, everybody needs to know what's going on. We're all working together as a team to make sure that someone's getting into the property that they want to be into. Mm-hmm. And it's communication. You know, for example, someone may come to me, and I may be able to give them a pre-approval, but I also may be given that pre-approval saying, these are the potential issues you could run into, because there could be other parties involved in making a decision as to whether to be approved. So it's good for me to be able to have the ability, you know, and everything's based on the client's comfortability. You know, am I allowed to speak with you or not? And which we typically get that permission. Once we have that permission, I can give you some of that information. You can relay information back to me on types of properties, and we can be working together to make sure something's going to work. If it's going to move forward smoothly, nice and efficiently, and if there could be any potential hookups, we both have the heads up, and we want to make it a smooth experience in this partnership. Right?
Yeah, and at the end of the day, our job as realtors is to find you a home and to get you into that home or to sell your property, and your job is to get somebody a mortgage so they can buy the property. So it really is a team effort, and just even behind the scenes, the back and forth paperwork, making sure there's that good relationship, good flow, good communication. It really has a large bearing on how the entire process goes. So right on. Okay, well, this is going to wrap up. We're doing this in two parts. So this is part one. So this wraps up part one. Part two, we're going to get into more details concerning somebody who, let's say you already own a home, you're going to sell that home, you're going to buy a new home. And how does that process work with financing and with timing and all those other things? So, hey, thanks so much for watching, and we look forward to seeing you with part two.